Hello student. Now today in this session of class 11th accountancy, we will be going to discuss some of the principles of accounting. As it is already known to us that accounting is based on principles. Generally accepted accounting principles are there which are to be followed while preparing the books of accounts. So it is assumed that every accountant has followed these principles in the preparation of the books of accounts without any mistake, without any error. Okay, so these are to be followed. So what are these principles? These are the principles which are the general guidelines or provide the instructions to the accountant that how they have to maintain the books of accounts and how the books of accounts should be prepared. So we will be discussing few principles here in this session. The very first principle that is related with the accounting entity or business entity principle. This principle suggests that the books of accounts can be prepared only for the business organization. It can be prepared on the name of the business organization only because the business and the owner or the proprietor are separate from each other. There is a separate legal entity. So when we are preparing the books of accounts, the books of accounts are prepared in the name of the business, not in the name of the owner. Okay? Owner के नाम से books नहीं बनेगी, business के नाम से बनेगी. Whatever may be the form of organization, this will be prepared under the name of the business entity only. So this is business entity principle. Then comes money measurement principle. Money measurement principle indicates that only those type of transactions of the business can be recorded which can be measured in terms of money. If we cannot measure any transaction in terms of money, or there is no monetary worth involved in any transaction or the activity, so that should not be recorded in the books of account. Only the monetary worth which is present in the business transaction, those transactions get the place in the books of accounts. No other transactions related with any of the qualitative characters will get place in the books of accounts. जिस एक्टिविटी में आप पैसे का आकलन कर सकते हैं, ये बता सकते हैं कि इस इवेंट में कितने पैसे का लेन देन हुआ है या होगा, हम सिर्फ उसी प्रकार की एक्टिविटीज़ को अपनी बुक्स में लिख सकते हैं. थर्ड प्रिंसिपल इज अकाउंटिंग पीरियड प्रिंसिपल. अकाउंटिंग पीरियड प्रिंसिपल is the principle which suggests that the businessman should know about the performance and the position of the business after a certain time period. So businessman is basically interested in knowing this thing, that whether the firm has gained or firm has suffered the losses, and what is the position of the assets and the liabilities of the business. And for this, the period, that is the session, is divided into small parts. And after every session, the businessman or the business organization, they are reviewing the performance of the business so that they can come to know that whether they are working according to the desired results or not. And if need, they can make the necessary changes in their policies and their strategies so that they can get the desired economic results of the organization. So every businessman is interested in knowing this thing, that what is happening in the business, as well as the various users of the business are also interested in knowing this thing, that what is being done by the business during the whole accounting year. So for that, we have to keep a certain limit of the time period, and every businessman, after every 12 months, they want to find out this thing. So this 12-month period is known as an accounting period. So after every 12 months, the businessman is supposed to prepare the books of accounts, and he is supposed to find out the amount of the profit and the loss of the business and the position of the assets and the liabilities of the business by preparing the financial statement. So this is accounting period principle. Now we talk about the another principle, that is full disclosure principle. Full disclosure principle means what? That there has to be a complete disclosure of all the relevant events of the business, okay, which have an effect on the decision of any users of your accounting information. So those information which has a relevance with your business and which will affect the decision of any of the users of the business, you have to show all those informations while preparing the books of account. All the material information should be presented or should be recorded in the books of accounts, which has a direct or an indirect effect on your business. Then comes the next principle, that is related with the Prudence Principle, conservatism or the Prudence Principle. Prudence Principle, it suggests that we have to record all possible losses of the business. All possible and anticipated losses of the business should be recorded by the businessman in the books of accounts. So here we have to see that we have to make all types of necessary provisions related with the losses of the business, and whatever losses we are anticipating in the business, we have to record all those probable losses. We should not forget to record any probable loss of the business. We may forget to record any probable income of the business, but we should not forget to record any probable loss of the business, because then after the preparation of the final account, whatever profit and losses of the business will come, those profit and losses of the business will not give us the true and the fair result of your business. And maybe various financial policies might also be affected if we come to know this thing, that we have not recorded the number of probable losses or the provisions which we were supposed to make, and due to which the profit margin has declined and we are not in the position now to fulfill all those policies or the financial affairs of the business which we have thought by going through the profit which we have got in the business. So it is said that all anticipated losses should be recorded in the books of account. So this is the principle, that is of prudence or the conservatism principle. Now comes to the materiality principle. Materiality principle means all the items which have the material impact on the business should be recorded in the books of account. Any immaterial information which is not having the effect on the business or which is not having the effect on the decision of any user, and those which are not realistic should not be recorded in the books of account. Only the items which have the effect or which can be recorded in the books of account should be shown in the books of account. Let's say if we have purchased a building for rupees 2,50,000, that is a material principle, because we have purchased the building and we have paid rupees 2,50,000. But after a time period, let's say it is having the value of 10 lakh rupees, or its turnover of the business is 15 crore rupees, expected turnover of the business, we are anticipating this much thing. So this thing should not be recorded. Okay, because these are not materialistic. Materialistic is what has really taken place. Okay, so this is the principle of materiality. Then comes the next principle, that is related with the historical cost concept. The historical cost principle suggests this thing, that all the assets and the liabilities are recorded in the books of account on the same cost on which either we have purchased the asset or the liabilities have been incurred. There will be no change in the books of account related with the values of these assets and liabilities, because we are not recording the fluctuations in the market price. So all these assets and liabilities, once are recorded, will always remain in the books of account unless and until those assets and liabilities are completely written off. Or if there is any change in the assets of the business due to the purchase of the business, or due to the sale of the business, or due to the compulsory charges like depreciation, then only that value will show the changes, and that is also due to these technical things. Otherwise the market value is not considered, because there is a fluctuation in market value every now and then, and it is not possible for us to review the books of accounts every now and then. So what we have to do, we have to record the books of accounts on its original cost only. So this is the concept related with the original cost or the historical cost principle. Then comes matching concept, the matching principle. Matching principle gives you the information that there should be some match between the revenues which you have generated and the expenses which you have made in earning those revenue. Whatever incomes are being generated by you and whatever expenses you have made on generating those income, there should be certain match. Okay, जो आपने कमाई करी है और उस कमाई को करने के लिए जो खर्चे करे हैं, उनके बीच में कोई जस्टिफाइड रिलेशन होना चाहिए. It should be not be like that we have not spent any money, we have not done any expenses on a particular item, but we are showing that we have got certain income from that item. So this is not possible. So you have to match this thing, that if you have got some earnings, so there are relative expenses for those earning also. So this is a matching principle. Okay, and then come the dual aspect or the duality principle. The dual aspect or the duality principle suggests this thing, that while writing the books of accounts, there are two sides, that is debit and credit side. So one thing should be recorded on debit side and another should be recorded on the credit side. So it simply says that there is a twofold effect of each and every transaction. So whatever transactions we are recording in the books of account, it is having a double effect, because we are preparing the books of accounts on the basis of double entry system of bookkeeping. So this is a duality principle. One debit should have one credit, or every debit should have a corresponding credit entry with it. So these were some of the principles. By following these principles, we can prepare the books of account in a true and fair manner. Hope you understood all these principles clearly, and now you will be able to make the use of these principles while preparing your books of accounts. Thank you and have a nice day.